Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a long trade on soybeans. A little bit of a kind of a funky market. We haven't traded this one very often before, but the way that it's setting up is just it's so good looking. First off, let me get my targets and stops in place here. This is going to be an all-in, all-out trade, and the primary reason behind an all-in, all-out on this one is we've just got the channel highs above us. So I'm really not expecting prices to go through those channel highs. If it does, not by much. Maybe retest this previous high back here, double top, maybe a little bit through. But because we've got the channel highs right through here, I really don't anticipate it going much farther through there. Now, let's talk about the channel. The channel that we're looking at right now is a really big one. If we zoom out quite a ways here, the channel that we're playing off of right now is a multi-day channel all the way back from Sunday, actually even on Friday for that little high there. So we've got the channel highs that are coming up through here, and we have the lows that are coming through here. And there's a little bit of a midline. You can see every time we come to that midline, we get a little bit of bouncing. There's some there, and when we break through it and kind of whip around it, it still holds it on both sides of it. So this whole area is an area of interest, and the fact that we came down after this big old gap, this little gap higher, big push up. That big push up brought us right back down, hit the highs of the channel, and then tested the midline, and now we're bouncing back up again. And that's a really, really strong bull candle too. So I'm just looking at this in the sense that we look really, really strong to the upside. Even though it's a midline test of not the full bottom of the channel test, there's still a good likelihood that the way that this is setting up should kick us up a little bit higher. So I'm long at 981 even. Now, soybeans, if you're unfamiliar with this market, it does tick in quarters, much like the S&P 500. And actually, every tick is 1250. So everything is nice and consistent when it comes to that. So where we're looking right now up to 984, we're looking at 984 from our entry at 81. That's 3 points. So again, 3 points, the way that the soybeans works is in quarters. So 3 points is really 12 ticks. We're trading 4 contracts. That's 48 ticks. At 1250 a tick, that's 600 on the full trade if we get it filled at 984. So that's kind of how that works. If you're unfamiliar with the soybeans or you've never traded it before, it's a great market. Out of all the agriculture markets, I like soybeans the most. You do have corn and you've got wheat and all those, but they're a little bit slower. Soybeans is kind of where the volume and volatility is at. So all in all, it is a little bit of a slower market, so we'll probably have to come back to it in a little bit. We're triggered into the trade, our stops in place, our targets in place, everything's ready to go. We're just waiting to see if this wants to continue. So we'll be back in a little bit, see if we can get that push back up and start filling up into the previous highs, into the channel, and we'll get 984. Okay, so we're testing our target. We hit the target at 984 and we never filled it. So because of that, I don't want to give anything back. So I'm going to move my stop preemptively to break even, and I'm actually going to trail it a little bit closer. Because we're hitting our target, our stop's at 984, I want to lock in at least a point on this trade. I don't want to give anything back. So 982 is going to be where my stop goes, just to prevent any possibility where we give everything back after it's already hit our target. I don't want that to happen. So worst case, if it does trigger us out, we make $150, 3 points. If it does push back up and fill us at 984, then we're sitting in a good place. But they're just having a hard time getting up here, up into this channel. So the fact that they're testing and everything, I really don't want to give anything back. So our stop's locked in at 982, and yeah, we're just kind of waiting to see if it wants to push up. We are getting that movement exactly what we expected to see. It's just a matter of seeing it continue up to fill our target at 984. Now, I wouldn't blame you at all for getting even more aggressive and maybe locking in 2 points. That still puts you under the current candle's low, and it kind of protects you from giving back too much. And honestly, that's not a bad move at 983. That locks in 2 points. If we get stopped out, then we're at $300. It doesn't give us a whole lot of breathing room. Tell you what, let's go to 1.5 just to give it a little bit more breathing room. I don't want to put it one tick under this candle's low because it might just tick lower. But at least with this, we lock in 1.5. That still locks in some decent profit. But if it goes back up and fills us at 984, then we're sitting good. So hopefully this will push up. But if not, we'll just pause the video and we'll come back as it tries to push back up into it again, hopefully, or it stops us out at 982.5. So we'll be back. All right, I just want to do a quick little update here. We ended as a doji on that candle that tested our target. Because of that, I really don't want to give anything back. So I will go one tick underneath it at 83. I don't want to see that come back at all. You could go down one more tick from there at 82 3/4. That actually locks in one extra tick for us, just to give it room. Sometimes dojis get the one tick break and then the push in the other direction, but I really don't want to see a doji appear. That's confusion, which is all a doji is, but it's confusion where you expect to see it, right at the channel highs. So I don't want to see this reverse back on us. So we've got our stop moved up to 982 3/4. Target's still at 984. We're not seeing it come back. Now we're testing it again, but they're not filling it. They need to fill it. Come on. Maybe, maybe not. 984 is still testing. No fill. No fill. I feel like I'm trading the bonds right now. See if they can push up one more time. Now, with the amount of resistance that we're getting up here at 984, I mean, that almost leads me to believe that someone's trying to defend these highs up at the channel, and if they break through, you might get a little bit of a stop run, push higher. You know, on the soybeans with the amount of volume that so far we're seeing, if they are defending, it's not going to go that far, but it should at least give us a fill at 984. You can see they're having a really, really hard time getting through there, though. We'll give it a little bit of time, see if it wants to fill us here. But our stop's locked in place, 982 3/4, just to lock out any risk on the trade. I don't want to give anything back on it, that's for sure. And looking at the target at 984, so still, you know, kind of sitting on hands or waiting for this thing to go up. We've hit our target probably 4 or 5 times now, and just not filling it. There we go. We got our target, finally. finally. The stop out of the way there, and we'll cancel that. So finally got the target at 984. It definitely made us wait for that one. Because it filled us, from the looks of it, we were probably pretty close to the end of the line. It'll probably tick through there pretty soon. But 984, finally got it filled. Beautiful move up. Locked in 3 points. And again, the way that this one works is it's in point increments like the ES, so it's 4 ticks per point. We traded 4 contracts, so we locked in $600 on the trade, 3 points. So beautiful move. If you have any questions about it, feel free to send us an email at School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.